Hello, this is Nate, your host and partner on this journey, and welcome to Outcome Becomes Income. The goal of this channel is to create an all inclusive community to build long term wealth via the stock market. In any 20-year period, the stock market has never lost money and it has outpaced inflation. The barrier to entry has never been lower. Many brokerages no longer charge commissions to buy and sell stock, and with the addition of fractional shares, we can invest with as little as $1. There has never been more options available for us to invest in the market and become part owners of publicly traded companies. With some form of income, a brokerage account, time, and patience, we can invest in a sound financial future together. Please join me as outcome becomes income.
Hello, this is Nate with Outcome Becomes Income. Today I want to talk a little bit about a quote I came across. I was looking at somebody's laptop and they had a sticker on the top of it. And it's a quote by the late, great former Supreme Court Justice Ruth Bader Ginsburg. And it says, "To those accustomed to privilege, equality feels like oppression." And I love this quote for so many reasons, but this is a show about money, finance, and investing. So I want to tie it to that. And there's never been a better time to be investors. It is very much democratized. And as I often preach with things like no commissions and fractional shares, the barrier to entry has never been lower, and we can get started with $1. And if you listen to a lot of my past episodes that I've talked about that in brokerage accounts, again, as a refresher, there's a few brokerages that you can easily sign up for that offer fractional shares with no commissions. One of them being Stockpile, but that also now charges a monthly subscription fee. There's ones like Robinhood, which I'm not a big fan of, especially how they have gamified investing. And as investors, we really should not be trading in and out of stocks. And what comes to mind is the meme stocks that have quickly gone up during the pandemic, but have crashed down. We really want to be investing for long periods of times and really multiple decades and continuing to add to our winners. So again, I'm not a huge fan of Robinhood. The other one that I do really like is M1 Finance. They have also recently added things so that you can add a custodial account if you have kids that want to get investing and are under the age of 18. So M1 is the one that I would really recommend using. SoFi is another one also that offers that too. I haven't used that one as much, so I really cannot speak to it as much, but it does have the option to trade fractional shares. But going back to M1, the only real downside that I've seen to it is that you would be capped out at a total of 100 different companies. But realistically, if you get to that point, it's probably going to be further down the road. So I think it's a great place to start, and you can create what they call pies. So you can put like stocks together, whether it's mutual funds or ETF index funds or individual stocks that are in the same sector or industry. And you can do that with, again, no commissions and fractional shares. So I think that is a great brokerage to start with. The other thing is that you can start with $1. That there's the playing field is level in the sense that everybody can do this now. So I would encourage you not to get caught up with looking at what others are doing, how much money they're putting in. People have a tendency to exaggerate anyways, and you need to do what is best for you. And $1 is something that everybody can start with. Another way you could look at it too is that if you can afford $1 one day, then you could ratchet it up and do $2 the next day and so on. Or you could do it on just the weekly basis or the monthly basis. And then again, we're right back into dollar cost averaging. And if you're looking for companies to invest in, well, you can start with a simple test that David Gardner of the Motley Fool has, and he calls it the SNAP test. Think about things in your daily life, in my daily life, that everybody's daily life that they use and know. And think about snapping your fingers, and if that company no longer existed, would your life change? Would those around you change? And would the world change? And some of the examples that really come to mind first, if you think about this, is start with Amazon. If you snapped your fingers and Amazon no longer existed, would that affect how your daily life goes? For me, it would, and I'm sure for a lot it would. Another one is Apple. Now, you may have an iPhone or you may have a MacBook or something. You may just use their headphones or any of their streaming services. But if it no longer existed, you probably would notice it and those around you. Another one like that is Google with internet search. It has become synonymous also with verb. Also, I'm a fan of stocks that become a verb. If you're going to do an internet search, a lot of people just say, I'm going to Google it. Let's Google it and see. So that's another strong indicator of companies that are ingrained in our daily lives. And then those are all more technology and communications related. But another one that jumps out to me that is more consumer facing is Starbucks coffee. There's a lot of places where you can get coffee, but Starbucks is pretty much the one that we all know, and it is on the pricier side, but Starbucks themselves have never said that you're going there to get an inexpensive cup of coffee. And if Starbucks no longer existed, would other coffee places fit the bill? Probably so, but I'm sure you or those around you would notice it. So that's the idea you can think about if you're wanting to invest in individual companies. Now, maybe you don't want to deal with that research and look at any of those companies individually. And there's a way where you can buy all those companies together. And that's where ETFs come in and index funds, the easiest being the S&P 500, which is just 500 of the largest companies in the US, but it encompasses like 75% of the total market capitalization of all stocks. Now, these companies are also based in the US, but a lot of these companies are international in the sense that many of their sales come from outside the US. A good example of this is an old stalwart company like Coca-Cola, where over 50% of their earnings come from outside the US. So I would say with a lot of these companies, you're getting international exposure as well, just by the presence of them doing business outside of the United States. Another one that you can do if you're looking for broad market exposure is Vanguard's Total Stock Market Fund. The ticker symbol for the ETF is VTI. And by the way, the one for the S&P 500 is VOO. So VTI, you get even more exposure. It's about 3,700 companies. So you're getting a mixture of large companies, medium companies, small companies. Again, you have that diversification between different sectors, but also companies that have international exposure in the sense that a lot of their business is done outside the United States. So just to tie it all together again, that I love that quote. To those accustomed to privilege, equality feels like oppression. For so long, insiders on Wall Street and hedge funds, they had an advantage, but that is slowly becoming taken away as investing becomes more democratized with places that offer free trades, no commissions. And you have the advantage over those same Wall Street people, those hedge fund investors. They're looking to make money on a daily, weekly basis, and they have to trade in and out of things. You and I are not limited by that. We're thinking in multiple decades. So that gives us a leg up to continue to add. And right now, the stock market as a whole looks pretty ugly. It's pulled back over 20% this year. But money is made in these downturns. It's just hard to see it at the time. But when you zoom out multiple decades, 10 plus years, 20 years, you're going to see that those little investments that you've made have compounded. And the other part of that, just being able to add more and more on a weekly or monthly basis or whatever it is going to help tremendously as well. So those insiders, they're looking at this as the game is rigged in their favor. But realistically, you and I have never had a better chance to outperform them and do that by just continually putting money into index funds or the companies that we know, love, and trust, and doing it consistently. And that's where I'm going to end it today. Thank you so much for listening, and I'll talk to you soon.
If you're watching on YouTube, please like and subscribe. If you're listening on a platform like Spotify, Apple, or Google, please leave a rating and review. This will help spread the word and get our message out there. And if there's anyone that you think that can benefit from this content, please share. If you have any questions, comments, concerns, or just like to drop me a line, please feel free to do so. All feedback is welcome, and I love hearing from listeners. You can follow me on Twitter @BecomesIncome. drop me a line at email outcomebecomesincome@gmail.com and see what pictures I'm posting on Instagram and TikTok at outcomebecomesincome. This is Nate, and until next time, thank you for being a part of Outcome Becomes Income.